What happens if China's rising AI giants threaten Nvidia's global dominance? Could two Chinese startups going public shift billions in investment away from Nvidia's chips? And with CEO Jensen Huang selling more shares, is this the moment to hold, buy more, or cash out your NVDA stock? Today, we break down the facts behind Nvidia's latest slip, China's AI push, and whether Wall Street's favorite AI stock still deserves its crown. No matter where you live in the world, if you care about Nvidia, AI stocks, and the global tech race, hit that subscribe button now. Let's jump in. Just last month, Nvidia's stock made headlines worldwide, overtaking Microsoft to briefly become the world's most valuable company. Its AI GPUs are still the backbone of massive data centers powering ChatGPT, OpenAI, Google DeepMind, and hundreds of AI startups. But even as Nvidia rides record demand, new headwinds are brewing. The biggest? China, where two new AI startups, including more Threads founded by an ex-Nvidia exec, are preparing to raise $1.7 billion in IPOs. This means more local competition for Nvidia, and a clear sign that China wants to break free from American chip dominance. So why does this matter so much? Well, because Nvidia's China business is, honestly, just huge. Earlier this year, CEO Jensen Huang warned that U.S. export bans on its advanced H20 AI chips could erase around $15 billion in sales. And China's market for AI hardware could reach $50 billion in just a few years. But the U.S. has restricted Nvidia from selling its best GPUs in China, forcing it to build these watered-down versions that still need approval. Now, China is building its own. More Threads and other startups are snapping up talent and money really fast. Meanwhile, investors noticed another worrying signal. CEO Jensen Huang just sold another 200,000 shares of Nvidia stock between June 24th and 26th. That's on top of his earlier plan to sell over $800 million worth. Should you panic? Not necessarily. The sales are under a 10b5-1 plan, which is a pre-scheduled legal way for insiders to sell shares without violating SEC rules. But when insiders sell big chunks near all-time highs, smart investors always ask, do they know something we don't? Adding fuel to the fire, the clock is ticking on a potential new wave of tariffs. A tariff pause deadline is approaching on July 9th. Investors are watching closely. Any sign of renewed trade restrictions could further limit Nvidia's ability to ship chips to China. Nvidia has responded by designing new chips specifically for China, but they may not be enough to keep market share as local players catch up. It's not all bad news for Nvidia. In June, the company announced massive AI infrastructure partnerships in Europe, teaming up with Deutsche Telekom to launch the European Union's first industrial AI cloud for manufacturers. They're also expanding AI deals with the United Kingdom and Saudi Arabia, proving that Nvidia wants to diversify beyond China. And the numbers back it up. First quarter sales jumped 69% year over year to $44 billion, easily beating Wall Street estimates. So, will China's new AI chip startups truly threaten Nvidia in the next 12 months? Well, most experts say, not yet. Building world-class AI GPUs really takes time, talent, and massive research and development. Nvidia's 20-year head start just won't disappear overnight. But if more Threads and other local champions keep raising billions, China could be on track to chip away at Nvidia's dominance faster than most investors expect. So is Nvidia a buy or sell now? If you believe AI spending will keep booming globally, Nvidia's leadership isn't disappearing tomorrow. But China's aggressive push, plus insider selling and export bans, are real risks you shouldn't ignore. Watch for the next earnings report, trade deal updates, and any new restrictions. This story is just heating up. What's your move? Hold by more or cash out profits? Comment your prediction below, and don't forget to like, share, and subscribe for more deep dives on Nvidia AI and global tech trends.